Why we have the masterclass every Saturday from 11 a.m. to 12 p.m. Just when you're having your brunch, your uji, your whatever you're having this morning. And I mentioned that Angie on Bonds is in studio with us. Hi, Angie. Good morning.
Good morning, Elaine.
Good to see you.
Thank you for having me.
Sana again.
Asante.
I think when just before we went on that break, you kind of just said what you were going to talk about, but you did not introduce yourself. And I don't want to do you an injustice. So could you please introduce yourself and how you got to be the Angie on Bonds?
Okay, thanks for these. So this is Angie. Full name Angela Kariuki. Why Bonds? Why Angie on Bonds? So let me start by saying that Angie is a lover of life and a happy human. I mean, there's me before anything else. Angie is also an entrepreneur. I run Angie's Closet, a clothing line where I sell official wear to the women because I believe image is everything. And also now Angie on Bonds. So this brand, where it came about, my education background is in finance. I did finance at the university. And then I used to work as an investment banker, a treasury bonds trader at FIDA Investment Bank, way back before I stopped that and went into clothing because I love fashion. So as a trader, I have all this information about bonds. I used to be a trader. But then after I got into the business, I realized that personally, I was doing my investments the wrong way. I was making my investments in the wrong way. And I needed to change a thing or two on exactly how I was investing. So I started investing. There's bonds trading, there's bonds investment. So I personally started investing, and it made so much sense that I thought, let me just talk about it because I have a feeling there are people stuck out there in our old traditional way of investing, which is mostly just real estate. We're ever buying mashambas here and there. So I started talking about it, and I realized so many of us do not know what bonds are, do not understand. It's like we don't have much information on bonds, yet they have been there for a very long time. And even those who know about bonds still do not invest in it. So I guide people, I educate on my social media platforms on how to open an account, what bonds are, how to go about it, how to create a bonds portfolio so that we build up on the passive income, which is what we really need. So we keep chasing the active income every now and then, but there's something we call passive income, which is the real wealth. So I've been just educating about it and doing advisory, one-on-one advisory. I hold master classes sometimes and a bit of a brokerage as well to help people buy and sell the bonds. So yes, that's how Angie on Bonds was born, just to help people invest in the right way. Okay,
you've put it so well, and it is exactly how I have come to know you, because I obviously know you from social media because I consume your content, because that is what smart women do. They consume Angie on Bonds content. And I'm just going to highlight what I know about bonds because I'm amateur, and I'm sure most of our listeners are at this level. So demystify this. I know government bonds, for you to purchase, you need to open an account with CBK. It's called a DAO account. Am I right?
Yes.
And then CBK advertises upcoming bonds, and any citizen of the Republic of Kenya is qualified to buy bonds. Then you can use the bonds as security to borrow from a bank.
Yes, that's true.
And lastly, there are several types of bonds. Now, as someone who has no more information up until that point, please take us through this.
And now, I'd like to start with, you have all that information.
Yes.
And many of us have that information because, I mean, the information is out there. CBK website, I've been talking about it. Why are we not doing anything about it? Because that is where the main problem is. Yes, the way you've highlighted all that, how to open a bond, you need a DAO CSD account, what bonds are, but why are we not actually doing it is where the main problem is. So, before you think of an investment, you need to start with a goal. Why are you investing in the first place? Because that is what will lead you. If you don't have your goals right, if they're not clear, then you might never invest even after having all this information. So what exactly do we want to achieve in life? Most of the times we don't think about it. We just flow with life like, okay, I have bills to pay, I have this, I have that, it's end month, then on to the next. But we don't sit and think about what exactly do we want from this life. So that is where I'm finding most of the challenge when it comes to even bonds investment, because the information, the basic information we have, but we're not doing anything about
action.
Yes, action. Or we start And then we just stop because we don't have our goals right. What exactly do we want from this life? Because that is what now will guide you. Because if you don't have that, then anything goes, and bonds might not be that serious.
Correct.
So bonds is one of the investments we have. We have very many of them. It's just one of the many investments we have.
Yeah.
So what I love about bonds is this, they're very structured, and the fixed income a bit of it. So you're very sure of what exactly you'll get at what point. So I love the structure of bonds. So maybe I start with what bonds are.
Yes.
So bonds are a loan to the government.
Okay.
So why is the government borrowing? Because government is a business, just like any other business, just like I run my business. Every now and then I need loans to maybe repay loans. I need loans to stock up. I need loans. It's just a business. So our government falls short and it has to keep borrowing. Is it unique? Is it just Kenya? No, all governments actually borrow. So it's nothing unusual.
Okay.
So how do they borrow? Government borrows either domestically, now through bonds and bills, that is borrowing from its people internally, or externally from the likes of IMF, the World Bank, and Euro bonds, So when you talk of bonds, it's how the government borrows domestically from its people through things now we call bonds. So they're basically loans. We have bonds and bills, same thing, but just structured differently. So what are these? What are the types of bonds? We have the fixed. We mostly have two types in the Kenyan market.
Okay.
The FXD bond and the IFB bond. So let me start with the IFB because it is what most people love, and it is what they wait for. It is an infrastructure bond. So that particular one, government borrows for a particular project, infrastructural project. It's tax-free. Why is it tax-free? Because we are a growing economy, and for our economy to develop, we do a lot of infrastructure projects. So whenever they want to borrow a huge chunk to fund an infrastructure project, then government comes to borrow through an infrastructure tax-free bond, the IFB bonds. The other bonds, the FXD bonds, which are taxable, just fixed interest kind of bonds, which are taxable. And they range from 2 years, all bonds range from 2 years to 30 years. The longest we've had, I think, is the 30 year, which is, we call it an SDB bond. Just it's still an FXD, a fixed interest kind of bond. It was issued way back. It was a 30 year, just a long term bond. So we mostly have two bonds: FXD, IFB. That is tax free or taxable. Two structure of taxing the FXD bonds. I hope I'm not too technical on these.
Trust me, you're putting the information out there. People will reach out to you and ask more questions. But this class so far, I mean, come on. Don't even stop.
I hope everyone has a pen and a paper. So
Yes, we're all writing notes, myself included.
Oh, good.
Yes.
So the taxation, two ways of taxing. The short-term bonds, that is 5 years and below, they're taxed at 15%. What are we taxing? The return that you're getting. Because if you're lending the government, they're paying you back a return which we call the coupon, which is fixed. It's given back every 6 months. So that coupon will be taxed. And the tax is taken away from you, withholding tax. So they withhold it before they send the coupon to you.
Okay.
Longer term bonds, that is 10 years and above, they are taxed at 10%. So just 15% or 10%, then IFB bonds, which are tax free.
Okay.
So the return on a bond, or what I've called a coupon, it is calculated annually, that is per year, but it is paid out every 6 months. So if you invest in a bond, every 6 months you will receive a coupon. Then on maturity, if it's a 2-year bond, if it's a 10-year bond, on maturity you receive back your full amount. If you invested 100K, you'll get back 100K after the maturity of that particular
So after,
bond.
if I want our listeners to really understand this, let's work with a figure of 100,000 Kenya shillings.
Yes.
So I've invested my 100,000 Kenya shillings.
Yes.
Well, it's towards the end of the year.
Yeah.
So mid-June come next year, I get a
payment,
payment,
coupon,
yeah.
yes. Half of the coupon, because it's paid biannually, half of the coupon. Then after 6 months, you get now the other half.
Yes. So
And
my principal.
No. So your principal, the amount you've invested, 100,000, matures after the period of that bond, because these bonds have different durations, ranging from 2 years to 30 years. So if it's a 2-year bond, after the 2 years, you get back your 100,000.
Okay.
But in the course of those 2 years, every 6 months, you get a coupon every 6 months. Now, each bond has a coupon, pays out a coupon in different months. There's a bond that will pay coupon in Jan, July, February, August, after every 6 months. So different bonds have different coupon payment months. So So you structure your bonds in such a way that you know this bond pays in Jan and July, and it will forever pay in Jan and July. Nothing changes. Then you get another one that pays in February and August, because you know that is fixed. That will never change.
Yes.
So through something we call bonds laddering, you end up buying various bonds, different bonds that pay in different months that cover the whole year. So at every 1 month, you're receiving a coupon. Yeah, that's what's called now bonds laddering. So you create what you call a passive income. That is money coming to you. Passive income is when money works for you. Passive income. And that is where we really need to get to. So when I talk of goals, we need to have our goals right. When you listen to most of the goals, because someone will tell you, I'm working towards retirement. When someone says that, they need passive income. I'm working towards, let me talk of my personal goals, holidays. I love traveling. And I know I need holidays every now and then. So I need that passive income, because if I rely on my business or employment income, sometimes you're not sure what's going to happen. But this is an income you know that will be there whether you work or not. So you're able to plan better with the passive income. So that's basically how bonds operate. I know people confuse treasury bonds and treasury bills. So bills are shorter term. So bills are less than 1 year in terms of duration. And bonds are from 2 years and above. So 2 years and above, and bills are just, there are three of them. We have three of them in our Kenyan economy. 3 months, 6 months, and 1 year. Just three types of treasury bills. But on the bonds, we have so many of them, but they're either the IFB bonds, that are the infrastructure bonds, or the FXD bonds, that is the taxable bonds, mostly that, and then one STB bond.
Angie, as well, you're putting it so well, and it feels like bonds are such a safe investment. Are we people behind that we don't know this? Because if I have about say 6 treasury bonds that have invested in, that means I have money coming to me every 2 months, and it's passive and it's fixed. I can work with it, I can plan with it, as you say. You can plan your trips, you can do everything. Guys, again, this is why we have these master classes, because we need people like Angie to talk to us, because investment does not have to be whatever we are used to and what we learned and what school was about. Guys, I'm going to ask you, Angie, one question. How can we balance? I understand that most of us, I don't know, millennials, let me use that word for myself and maybe yourself. We have so many responsibilities, We are growing families. We have financial goals for ourselves. And now that you're telling us about smart investing, is it too late if I'm 35, where age and youth ends at 35? Am I too late to be smart in my finances?
So before we get to that question of is it too late, which of course it's never too late. If someone at 60, you can still start investing. You just need to pick. You just need, depending on your goals, the goals will forever guide you in what you need to invest in. If you don't have your goals, you'll have it wrong. And that is what we're doing. I mean, we're just investing for the sake of it.
Correct.
So where's the risk in these bonds? When I tell you every month you'll receive this kind of an amount, is it assured? No. According to investments, bonds are rated, they have the least of risk. They carry the least of risk. Clearly, when it comes to most of the investments you know about. Name them. Name MMF, name Forex, name SACCOs, what else? Real estate. Bonds are the least, if not among the least, in terms of risk. Least in terms of risk. So why is that? The thing is, I was sharing before we started this about there's someone who was seated, I think, on this chair, I think last year, and they really did a lot of my work, because now everyone started sending me videos of, this person is saying we're about to default, we're about to lose our money in bonds, and they are very sure that we are not going to get our money back. And I had to talk a lot and explain to people and tell them, you need to understand how the economy works. You don't have to get into the details. So these bonds, they're a loan to the government. So who lends to the government? The main people who lend to the government, it's not us. Us, we're just retailers. And we go in with a lose, maybe 100K, a million, 50K, because the minimum amount is 50,000.
I was going to ask that. What's the minimum amount?
50K. 50,000. From 50K, you can buy a bond.
All right.
So who are the main lenders to the government? The main one are the banks.
Yes.
Banks are the main people who lend to this government. We also have pension firms, the likes of NSSF. We also have parastatals. We have funds like MMF. I'll mention MMF because that is what has been, everyone has been talking about it. Then we have insurance companies. All these big institutions lend to the government. Then retailers is just a small portion. Retailers is me and you, or anyone investing below 50 million is a retailer.
Okay.
So when you say bonds, banks are lending to the government, banks do not have money. Where do they get their money from?
From us.
It's your money.
Yeah.
So it's your money that is going to the government. So for the people who keep saying, no, I'll keep off, I don't know about this government, but you have your money in the bank. And the banks are taking the money to the bonds. So you see, so
there's no need for that middleman.
Yes, you can go directly there. So it demystifies how these bonds work. If banks are the main people who are investing in these government bonds, then you will imagine if a default will happen, how that would look like, because everyone will be hit, everyone will be affected.
Yes.
Default will be as a last resort. It's very, very hard for that to happen. So by the book, it's classified, bonds are classified as the least when it comes to risk. So once you understand the cycle of how money circulates, then you can be more comfortable and know that the risk is very, very low. And then we know that the higher the return, the higher the risk. The lower the return, the lower the risk. So bonds have relatively low return compared to other investments, like maybe operating a business, but the risk is also low. So the higher the return that you're getting, then you know your risk is also going high. Yeah. So that's the whole thing about where is the risk when it comes to these.
Yes.
So is it late to start? No, it's never late to start. The question I'd ask back is, do you have your goals in place? Because even at 60, at 70, you can come up with goals. They don't stop. So you can start at any one time. The beauty of bonds is that immediately you start investing, 6 months later you receive your return, and every other 6 months until the maturity. So it's not something that you're investing to wait for 20 years. You see, that's the traditional way of investing.
Fixed
we are
accounts and all that.
Yes. Something like, let me say real estate, because that is what I think most of us are in. Most of us has what we call kaburoti.
There's somewhere
there's a kaburoti somewhere. And we need to change that, because when you look at that model, and I have nothing against real estate, but when you look at that model, it doesn't meet most of our objectives, because unless you realize a profit by selling it, there's nothing you're making, or unless you develop that kaburoti somewhere, there's really nothing you're making. But when you compare it to bonds, based again on your objectives, you're able to get a return every 6 months, and your money is still intact at on maturity. So, is it late? What do you want?
Absolutely not.
What do you want? The main question is, what do you want? What are your goals?
Yes.
Once you know what you want, then it's never too late to start investing in bonds. You just need to understand how they work and the structure and which bonds to pick. Are you going for short-term bonds, medium-term, or long-term bonds?
Okay. Angie, I'm very curious to find this, because I'm sure we've said everyone knows about bonds, everyone knows, but the action is where we fail. Could you kindly take us through what is the process? I'm here, for example, I have 200,000 right now as I'm speaking to you that I'm willing to invest in bonds. What is my process as of Monday morning? What do I do?
So first of all, bonds are issued in what you call the primary auction for your CBK every single month. So there's a bond open every single month through an auction, like a proper normal auction. You need to have a DAO CSD account. Now things are much easier. Back then, I think 2 years ago in the prior, you'd need to walk to CBK to open an account manually. But that has changed. We have a digital platform called the DAO CSD. It's on the CBK website. You can log in from there, or you can just download the app, register an account. You just need your details, your ID, your carry PIN, and your passport photo. Just that. Then you open an account. You need to attach a bank account, because there's no interaction. Everything is digital. There's no manual interaction. So when you're buying, the process is open an account, then wait for an auction to open. It happens every month. Then place a bid. On my YouTube, I have a YouTube channel, Angie on Bonds. I've outlined even the process of opening an account, a process of how to bid for that bond. So once you bid, you wait for the auction to close. Once it closes, they will send you the details of the amount you need to pay and a reference number. Once you have those details, now you do the payment. Again, we have internet banking now. You don't even have to walk to a bank. You just do it on your phone.
Yes.
And most of the banks have incorporated CSD payment, a central bank payment, a direct payment. So you just get the reference number and the amount, and you make the payment from your bank, and that's it. Then on the settlement date, now the CBK, now central bank, on behalf of the government, they are the agents that work on behalf of the government. They credit the bond to your CSD account, and they debit the amount from your bank.
Yes.
So now you're holding a bond, and as long as you're holding a bond, now it's like a contract with the government. I've given you this money, you need to pay me every 6 months. Every 6 months you will receive money directly in your bank account. You don't need to do anything. Money just comes in. You just get a notification there's money about to be credited in your account, and money just comes through directly to your bank account every 6 months. On maturity, you get back, now they credit back your money. There's no human intervention or anything. It's just a very smooth process.
Angie, just to take you back one step behind,
Yes.
From the bidding to the closing of the auction,
Yes.
Are we talking days? Are we talking weeks? And luckily, we are asking this on the first. It's the 1st of November, so it's at the beginning of the month.
Yes.
How long? How long is that process?
So an auction is usually announced a month prior. Like we already know what is on offer this November.
Month.
Yeah, it was announced in October. Usually given a week to 2 weeks, mostly 2 weeks. So you have ample time to actually bid. You have all the time to bid.
I actually was worried that it's probably 3 hours or something.
No. We have a whole 1 to 2 weeks to place the bids.
Yes.
Then once you do that, where we don't have much time is once the auction closes and they send you'll be notified on email, on SMS, and you will get the notification on your CSD app as well. Now, once the auction closes and you're notified about the details of payment, you're given like 2 days to make the payment. So it's usually announced mostly on a Wednesday or a Thursday. So you have Thursday and Friday and half of Monday. Yeah, most of the deadline for settlement is usually Monday by 2 p.m. to make the payment. So you have a day, 2.5 days to make the payment. So you have ample time for everything.
You do, actually.
Yes. And if you place a bid, please ensure you have money, because if you keep placing a bid, then it's successful, then you don't make your settlement, you can easily be barred from subsequent bidding
transactions.
Yes. So once you only need to make your bid when you know you have enough amount to fund what you're supposed to be paying for.
Okay.
Yeah.
In our opening statement, I mentioned that I'm aware, whether it's a myth or not, that you can use the bonds to secure a loan from a bank.
Yes.
Is it now if I have transacted from, say, a bank called Blue?
Yes.
Does that mean that I can only get security for a loan from the Blue bank, or can I go to the Red bank as well, or the Yellow bank? Is it any bank once I've bought the bonds? Or do I have to use the bank that I used to, make the payment for the bonds?
So yes, you can get a loan from the banks using the bonds as you can get a loan from the banks using a bond as a collateral.
Okay.
Most of the times it's easier when it's your bank. I've tried this with my bank and I've realized it's much easier. Sometimes they require you to transfer the bond. You can use it, the bonds, as a collateral when it's still under your CSD account.
Okay.
But sometimes they can require you to transfer the bonds so that they hold the bonds. It's easy. You see, there are 2 ways of opening an account, of buying bonds rather, directly under the CSD or through a nominee account, through an institution like a bank. You can actually buy bonds through a bank. Now, when they are holding your bonds, it becomes much easier. Again, it's different from bank to bank.
Yeah.
But you can still do it. So it depends on the terms and conditions of every bank. You can still do it when you're holding it under your CSD. You tell them, I have this portfolio. They raise it as a collateral. They'll be in communication with central bank and know what documents need to be, given.
Yes.
And then they can hold it. They can put a lien on it so that now they give you a loan based on that. So that depends. It's different from bank to bank. But yes, you can use the bonds as a collateral to get a loan.
All right. Guys, if you're listening, again, this is the Pink Perspective on SpiceFM. This is our masterclass. Angie on Bonds is on the hot seat, and she's taking us through the process of investing wisely, I would say. I mean, it's really about starting investing in bonds, and even with little capital, as little as 50,000 bob. Angie, I want you to draw us, a picture for us. Where do we draw the line in terms of business and passive investment? Myself, I'm salaried, and most of us, we're just comfortable, every end month I get this. But what if I spared a 50,000 every month and, buy a bond, and whereby if I have maybe now 500,000, I know, is it 15% or so every 6 months?
Depends. The rates of return, the rates are different. So it depends on each bond. It can be as low as 10%, it can be as high as, we hit 18.46% return per annum tax-free.
What?
Yes.
18%?
Yes, 18%.
Those are very good numbers.
Very good return.
Yeah.
Before I even answer that, we need to understand whenever you're making any investment, please always calculate the rate of return per annum so that you can compare with the various investments you're about to get into. Most of the times we don't do that and we just look at the cash flow. You think I'm getting this amount every, I don't know what months after. We don't calculate the rate of return per annum. If you're able to calculate that, then you'll easily be able to compare. So that when I